Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
May 12th, look it up. We have a rally every year. It's fascinating. So, yep, birthday rally every year. All right. So I've mentioned this lovely dollar coming up off the ground. It did finally poke above that 100.2, came back in, and I said I see it heading up to 102 and 60 area, 102.80 area. So it took a little while, but it definitely got going. All right, this is on a 2-hour, just to remind, it's kind of the pre-market heat map, but we are moving up into that 102.60 that I posted and have reviewed often. Also, this gold pullback is absolutely in view, and this is very important, right? Because this is correlated, gold selling off to markets rising. So we kind of had a teaser that this was going to happen before hearing about the trade delay again, 90 days, and the reduction of the threatened tariffs, which of course can be reversed. But for now, let's just go with what we have that was very bullish anyway, besides the VIX falling, which we'll get to. One was the dollar rising and gold falling, which is rotation into equities. So we did have this head and shoulders, nice little break, bounce into resistance, another breakdown, a little bounce, but a lower high, a lower high, lower high, lower high, then dump. So it really did go as advertised as it related to what's next is moving higher in dollar, lower in gold, and rotating into equities. And obviously we have that big bump here. Futures, I forget what time that was. Let's say 7 p.m. and then 2 a.m. And then the market didn't really go anywhere yesterday. Little bit of a dip, but not much. Same thing. This is the Qs. This is SPY. Big gap above the 200-day, which is what most are talking about. And as you know from my intermarket analysis, when I said still not done, we're still moving higher, we have not rolled over yet. What we got was a macro trigger to kind of push us into the futures gap up. And lots and lots and lots of stocks made huge momentous gains. But I do want to make a note over here. Not the oil that we had a really nice kind of inverse head and shoulder here. Inverse head and shoulder that looked like it was going to head up to 63 area. Well, it did perfectly, came back down. So that has been there. Remember from that breakdown of the bear flag? All right. So technically speaking, dollar up, gold down, oil up, and yields up with markets. One of these is wrong. Or I should say one of these is the warning, and that would be yields. So yields did spike higher, and that's not because of CPI being in line today. That was yesterday. We spiked higher very strongly with markets as dollar dumped. So this is the warning still, right? Bonds are still not in great shape, although many are just happy as could be that things are de-escalating. But I'm just kind of letting you know that this is the one thing that is still at risk of pushing higher above that 4.5 and upsetting all the new bulls. And some of these are new bulls, meaning they had held their hedges into this pullback all the way through the bounce. And right now they are, as I mentioned, this kind of key level. If we get and stay above, this is where we landed last week, below 57.70, but we did not break the 10 and the 50 week. Very important. And VIX had not fallen into my 20 price target. And as you know, yesterday VIX blew through. Anyway, once markets get above this 57.67, I said this would be the area where hedges start to cover. Basically, this whole concept here of gapping up above this key level, same thing with the Qs, is all about this reverse. The reduction in tariffs on China to 30% from what Trump had even been saying, oh, we'll reduce them from 145 to 80%. It's bluster. But the point is, that was the decision, mutual de-escalation of tariffs with China and US for 90 days, reduction to 30% from the floated reduction of 80% and the actual 145%. You get the point that we're still a lot higher than we are ever in history. But the point is, this was what excited the bulls. But the reflexivity of unwinding a stagflationary bet is also what you see right here. You see money flow, you see the unwinding of a stagflationary bet, and you have this growth risk unwind. So it's kind of the perfect storm of outsized reflexive move here, because expected was these tariffs causing inflationary forecasts to move higher. Now they have to reverse that. Now they have to put downside risks to inflation forecast. They had priced in no rate cuts or maybe 2 by the end of the year. But as inflation today shows, and of course it's very, very lagging, and it's not going to accurately represent what's happening really in the importing costs of higher shipping and such. But the point is, it's transitory right now, this illusion of low inflation. So some of that's getting priced out as well. And the upside risks to growth because of this quote unquote de-escalation for 90 days. So we have seen now this gap up, and they can swing back very quickly, by the way, in the other direction. But this is this short-term stay of execution that we would have this delay. Tariffs are not going to rise back up extraordinarily amounts until, what is it, August 10th? That's the expiration of the 90-day delay. So this is basically the unwind of quote unquote stagflation and global growth shock. Now, if it can hold, the cool thing is we now have a really good level to short against when this comes back down, this 57.67. But in the meantime, this is a gap up and it's still in play. Unwind of the global growth shock, unwind of stagflation, and there's lots more to it. But the point is, these are the kind of the key factors. All of this was manipulated in the futures market, no question about it. We'll see how long it can stay there. But this morning, we also did not get the CPI strength some are expecting. It's not going to come until later. And that also means layoffs potentially have been delayed. So this is kind of a cool thing if you think about it. This allows the retailers and such to now, in this small window that we have between now and August 10th, to place their orders from China and get them on stateside before the increase in tariffs. Now that's spiking shipping costs, no question about it. It's going to cause another supply shock. So we're having the shipping costs higher, further delays, more stress. It's like a COVID PTSD type of thing, right? They're having to on again, off again, on again, off again, and then navigate all these price changes. It's chaos, but there is one advantage. It will delay the labor shedding. So labor shedding that comes in because of 90-day tariff reprieve, if you will, saves Christmas. So that covers the peak holiday ordering and shipping period. And that will delay a higher unemployment rate or higher jobless claims through the rest of the summer. So that summer recession risk is likely going to be pushed out into Q3. Since this quote unquote liberation day, market has moved 17% into yesterday. I did expect VIX would come into 20 by OPEX, so that's still the bullish mood. And then this was all the rage, was the fact that we had mechanical buyers had ground us up to these levels that they had already bought in the past 10 days, which helped get markets where they were on Friday. And this was impressive. It was really kind of a Nomura and Goldman said, what we have so far is a lot of mechanical buyers that came in, stuff that I had talked about on that prior Monday. Stuff here, lots of buying still to be had, et cetera, et cetera. Anyway, they came in with size, long story short. Here we are. VIX absolutely moved into that and below the 20. We've had a massive rally since Liberation Day. And we got some stuff that we got to kind of keep in mind here, which is that heat map. Let's go over this again. Rising dollar, falling gold. As long as this continues to fall, I think markets are still going to be supported. And VIX really needs to now get back above 20, which is ironic. Next time you really can short markets with gusto is once we get VIX back above 20. It's a nice line in the sand.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.